What's up guys? Welcome back to my channel. Today I'm going to be talking about investing for beginners and the 3 things that I really wish I had known when I first started trading. Number 1, never invest with money that you're not willing to lose. It causes emotional trading, and that's where most beginner traders lose their money. If you're using money that you're not willing to lose to learn, then you really shouldn't be investing. So to really make money in the stock market, you have to take as much emotion out of your investing as possible. And a really easy way to do that is by buying into the stock a little bit at a time. And this is called averaging into your position, which means you're going to be buying a little bit of stock over a longer period of time instead of just buying one giant chunk with all of your money all at once. So averaging into the stock market is a great idea because it does take a lot of the emotion out of the trade. And so by averaging your way into your position, you're making it easier for yourself to get as close to the bottom as possible before it bounces back up and you can make those profits. Number 2, that's really important, is to know that investing is for long periods of time. So it's really important, especially as a new trader, to not be investing with money that you need right away. Only invest with money that you're willing to part with for a little while. Eliminating that stress is also another huge thing that will help you as a beginner trader. Number 3 is to have a defensive strategy when it comes to investing. Now, what do I mean by that? When it comes to investing, whether you're a new trader or an experienced trader, we can all go through this thing called backholding. Backholding is when you buy a position and then it goes down and the investor thinks that it's gonna bounce back up, but it doesn't. It continues to go down slowly over time, and that investor's actually stuck holding that position because they keep expecting it to go back up to where it was, and now they're way down here and they've lost a lot of money. But now they're either stuck holding it, hoping that it goes back up, or they sell it for a pretty big loss that they weren't expecting to take in the first place. A good way to eliminate that is by incorporating the strategy called setting up a stop loss. For those of you guys who don't know what a stop loss is, you can actually set your whatever trading platform you have to sell at a certain percentage or price of that stock, so that if it does continue to go down, you're not going to lose any more money because it's selling at that price that you have set. And this is really good when it comes to creating a plan, because you should always be going into your investment with an idea of when you're going to cut your losses, when you're going to sell, what's your return on your investment, and then what's your risk to reward management. Some traders go by a percentage. So if their stock decides to drop 1%, 2%, even 3%, then they'll sell their stock. Other people may go by a number and say, okay, this is how much I'm willing to lose on this stock before I have to sell it. When we can have that plan already made out in front of us before we even enter a trade, that takes a whole bunch of stress off of your shoulders when you go into that position or buy that stock, because you already have an idea of when you're gonna buy and when you're gonna sell that stock, whether it's for a profit or for a loss. These are the 3 things that I really wanted to talk about today. I just wanted to remind you guys that if you're trading with emotions, you're not going to win when it comes to investing in the stock market. You need to be able to take your emotion out of your trading. You need to have a plan when it comes to when you're buying, when you're selling. You need to have a defensive strategy, and you need to make sure that you're using money you're either willing to lose or use this money that you're not going to be able to see for a while. The main part about these 3 strategies is to really take away the emotional aspect of your trading as much as possible. In the end, nobody really knows what's going to happen in the stock market. The best strategy is just to make sure that you're trading without emotion. That's it for this video. I'll be keeping you guys posted every single week. If not once, then twice a week. I'm really trying to push out these videos for you guys. I love you guys. I hope you guys are staying safe, and we'll be seeing you guys later. Talk to you later. Bye.